We're contacted by a lot of crypto entrepreneurs, from one-off projects to crypto payments companies and even so-called crypto banks. And they all have one thing in common. They want us to help them overcome their banking challenges, which they all have. See, the problem is, without a reputable and consistent banking partner, most of these projects, they're dead in the water. But unfortunately, we can't help a lot of these projects because they've made a few critical mistakes. So in this video, I'm giving away our playbook for crypto businesses to help these entrepreneurs, maybe even you, better prepare to approach banks and successfully open accounts. Now, I do want to warn you, this is not beginner level content, but if you have a crypto business or you're thinking about starting up a crypto related business, this video will be super helpful. We're going to cover the 5 big mistakes crypto businesses make that kill their chances of successfully opening bank accounts. We're also going to cover the 3 changes almost every crypto business that we see needs to consider if they want to successfully open accounts. And at the end of this video, I'm going to share 2 countries you might be able to open accounts in for your crypto business, including the requirements you'll need to meet, how much you'll need to deposit, and a few insider tips that will make or break your application. You might as well hit the like button now because this video is going to save you hundreds of hours, thousands of dollars, and it might even help you reach your business goals a lot faster. So let's jump right into the 5 common mistakes, starting with mistake number 1, entitlement. I deserve a bank account. High level, what you need to understand here is that banks are businesses and they can choose who they do and do not want as a customer, which means your business is not guaranteed an account. Your business isn't automatically entitled to an account. And in almost all cases, crypto businesses, they will struggle to open because of how they're viewed by banks and how they are presented to banks by their owners, which in a single word is risky. Now, this obviously does not apply to everyone. There are plenty of crypto business owners who get it and who understand the limitations, restrictions, and even the expectations of banks, especially banks that cater to crypto. But unfortunately, one of the common scenarios we see is crypto entrepreneurs looking to open accounts in top banking jurisdictions, places like the US, the UK, Switzerland, Singapore, Liechtenstein, with the most reputable banks available. But these guys, they typically have an unproven business. They don't have any personal track record in the crypto industry, and they typically want to deposit between $25,000 and $100,000, sometimes even lower. And in case it isn't clear, this isn't a very attractive client profile for banks. But these business owners, they still strongly believe banks should open accounts for them. And frankly, that's a problem, because it means that many entrepreneurs, they don't think practically or pragmatically about their banking options and what they need to do to successfully open accounts. Which is why entitlement, or being entitled about banking, is mistake number 1. Because in order to successfully open accounts, you need to shift your mindset. Think about banking differently and realize that if you want to open an account, you need to play by the bank's rules. And you also really need to change how you think about your business, especially where and how your company is structured. And that's exactly what I'm going to be covering in detail in mistake number 3. But first, I do want to dig into one of the items that I just mentioned, deposits. And that's because mistake number 2 is making super low deposits. Now, this isn't an isolated mistake that only crypto businesses make. We see this across a lot of different industries, but crypto businesses are notorious for this. And the bottom line is simple. If you have a high-risk business, which basically every crypto business is, and then you want to open a bank account, you need to give the bank a reason to open that account for you. And in almost all cases, that means putting down a big deposit. Now, I can already hear certain people saying, yeah, but when my business gets up and running, the bank will be processing millions in transactions and they'll earn fees on all of those payments. Maybe that's true. And guess what? If you're coming from the payments industry, you have a 20-year career with Visa or MasterCard, have VC backing, or a history of building 8 or 9-figure businesses, banks will take you seriously, and you might not have to make a big deposit. But if you don't have that kind of background, and your business isn't already processing millions per month in transactions, the bank isn't going to take a risk on your company, because you and your business are unknown commodities, and the bank doesn't want to expose themselves to compliance and regulatory risks on a new customer in a high-risk and controversial industry, based on the promise that your business will grow. It's not going to happen. So you need to stop trying to motivate banks with promises of future profit and then give them a reason to actually care about your business instead. And you do that by making a large deposit. Think 1 million and up, if you want to access the best banks possible. Now, on the flip side, if you can't make a large deposit, you're going to struggle to open accounts, especially if you're not using any other products or services that the bank can generate fees from. So you might need to consider less savory banking hubs or sketchy digital platforms from less reputable jurisdictions instead. I am going to cover this for you in mistake number 4 in detail, which is all about choosing where to apply for an account. But first, I promise to talk about corporate structures, more specifically, where and how your company is structured. And this is something that a lot of crypto companies, they really need to think through before applying for another bank account. And that's why mistake number 3 is using the wrong corporate structure. Now, if you're in the crypto space, you're already high risk, we all know that. But we see a lot of business owners actively increasing their risk profile for their businesses even more by using the wrong corporate structures. And in most cases, this is tied to one of 3 decisions. First, the complexity of the structure. Second, the country where they register. And third, the personal profile in combination with the company. So let's talk complexity. If you show up to the bank with a Nevis LLC owned by a Vanuatu Corp, wholly owned by a Cook Islands Trust, you're not getting a bank account. Not unless your dad is a VIP at the bank or your grandparents, they're generating millions of dollars in revenue for the bank's bottom line. Or you come in with a massive deposit that the bank will have a hard time refusing. And this isn't a knock on Vanuatu, Nevis, or the Cook Islands, at least not in this particular example, because you could replace any aspect of this structure for a company in a different jurisdiction and you'll still face the same challenges. The point is, don't overcomplicate your ownership structure. If you can, keep your structure as flat as possible, meaning have a company owned by a natural person or persons, you and your fellow shareholders. And if you do need to add a parent company or a holding structure for any particular reason, make sure you choose jurisdictions that are widely acceptable, reputable, and that banks are familiar with. Which brings us to the second structuring decision that you need to make: where to incorporate. Now, there are a lot of different corporate structuring hubs out there to choose from, including places like the US, the UK, UAE, Cyprus, Malta, Panama, Hong Kong, Singapore, BVI, Nevis, etc. And depending on where you want to bank and the types of banks you want to access, some of these jurisdictions may be better than others. The point is, don't register your company in a backwater structuring jurisdiction that's going to struggle to open accounts regardless of the industry, because you're already high risk just from being involved in crypto. So choose a country that will help you reduce your overall risk profile in the eyes of the banks that you want. Of course, it's not just where you structure that will influence how banks look at you. It's also your personal profile and how that relates to the structure you've chosen. Which brings us to the third factor related to your structure, which is your personal profile. Now, what I'm talking about here is where are you from, where do you live, and where do you pay tax? And that's because if you're a citizen or resident of the United States and you have a crypto business that is registered and operating from BVI, banks will almost certainly raise an eyebrow and hit the reject button. And you can replace BVI with basically any country. Likewise, if you're a resident of Canada, Australia, the UK, any number of EU countries, and you have an operating company offshore, banks are going to see through that structure and question its validity. And that's because all of these countries and many others have what's called Controlled Foreign Corporation rules, or CFC rules, in place. And that basically means that the mind and management of your company, it sits with you, the shareholder and operator. So if you do have a BVI company that operates in BVI, the country you reside in will probably consider it a local operating company. And banks know this. So when they see someone with residence in a CFC country with an offshore operating entity, they're going to see red flags. And when banks see red flags, it's a lot easier for them to hit the reject button than it is to ask questions and try to determine whether your business could be a viable client or not. So the point is, keep your structure easy to understand. Register in reputable jurisdictions and choose jurisdictions that the banks in your preferred countries will accept. And that brings us to mistake number 4. Choosing the wrong countries to bank in. This is a really common problem that we see, both in crypto and in more mainstream industries. Business owners decide they want to bank in a specific country. Maybe they heard me say that Singapore is an excellent place to bank. Or maybe they heard someone else tell them that Belize is a good place to open accounts. It's not, at least not if you don't operate a local business in Belize. Now, there is nuance to determining where you should bank, because at the end of the day, whether you can bank in a given country depends on other variables too, including where you're structured, how much you can deposit, and even the people involved. All items that I've already touched on. But in almost all cases, there's a simple formula that you can follow to decide where to bank. And it includes, where does your business operate from? Where is your company structured? Where are your customers, clients, or users based? Where are your suppliers or contractors or employees based? Where are you a tax resident? Where can you access the financial services you want? And where can you find banks that are willing to serve you? Now, number 7, finding banks that are willing to serve you is obviously the biggest piece in the puzzle. And as promised, I am going to wrap up this video by giving you 2 countries that you can consider for opening bank accounts. But I also want to share 3 changes that every crypto business they need to consider before applying for another account, which I'm going to do right after the 5th mistake that crypto businesses keep making. And that mistake number 5, is being unwilling to change. This is simple to understand but really hard to implement, and it ties back to mistake number 1, which is thinking that you're entitled to an account. If that's you, just take a minute to consider why a bank would be willing to onboard a high-risk business unless it makes sense for their operations. And like I said, that usually means demonstrating to the bank that you'll be a long-term and profitable client that will be easy and profitable to work with. But being easy to work with isn't just about responding to your banker's emails. It's also about being responsive to the bank's requirements, needs, and making sure your business and transactions are as simple as possible to understand. And to do that, you may need to consider restructuring your company in a more acceptable jurisdiction. It might mean bringing on outside capital in order to seed your business and make you a more attractive customer from the beginning. Or it could mean recalibrating your banking expectations and looking for banks outside of your preferred banking jurisdictions, since you might be able to meet the requirements in these other jurisdictions instead. Now, all of this obviously hinges on one important assumption, which is that you actually need a bank account to operate your business. And that's not a question that I can answer for you. But if you do think you need a bank account with a reputable bank in order to operate, grow, and scale your operations, then the 2 countries that I'm going to share in a little bit should be at the top of your list when it comes time to apply. But first, let's talk about 3 tactical changes that almost every crypto company needs to make before applying for another account. Starting with change number 1, which is change how you approach banks. It's like anything. If you go in cold, you'll have a harder time making a connection. And yes, among the many other services that we provide, we do also provide warm introductions to banks for the clients of our account opening services. But a warm introduction doesn't need to come from GlobalBanks. If you have friends in the crypto space and they have existing bank relationships, you can ask them for an introduction. Maybe they'll help you get started with an email to their banker. Of course, that doesn't guarantee account opening, and you'll still need to consider all of the points that I've already shared in this video before you contact that banker, so you don't firebomb your chances of actually opening an account. But a warm intro could be the extra push that's needed in order for you to get that account open in a reputable country where you know banks are able to support crypto. But in order to do that, there are 2 more changes that you do need to make. First, a personal change, and then second, a company change. So the personal change, change number 2, it's change how you present your business. I want you to think about your application like the most important presentation that you've ever made. And that means I want you to spend time preparing, spend time reviewing your notes, spend time thinking through the information that you plan on sharing with the bank. And the most important bit of information that I want you to review and edit is your business description. Now listen, if you're coming into the bank and claiming to have the next big crypto payments gateway and you have 0 industry experience and you want to make a $25,000 deposit, you're not going to be getting a bank account open. But if you have a real business, you're solving a real problem, and you're able to make a compelling case as to why you would be a good customer for the bank, then bankers will take you seriously. But to do that, you have to come in prepared. You have to have your documents in hand. Even consider putting together a binder of your corporate documents, your business description, key personal information, and basically lay everything out for the bankers in a way that is easy for them to understand and hopefully accept. And talking about being accepted, there's one final change that you need to make, which is change your risk rating. Now, obviously, you can't take your risk rating from high risk to low risk overnight. It's not possible, especially for companies that are involved in a high risk industry like crypto. But there are steps that you can take to reduce the perceived risk of your business. And in a lot of cases, those steps involve changing the way you talk about your business. Basically, what I'm referring to is your specific business activities, business description, and how it relates to the crypto industry. In other words, what aspects of your business are specifically tied to crypto? Is it your customer base? Is it how you accept payments? Is it the underlying projects that you're working on? Figure that out. Then, wherever possible, try and isolate those high-risk activities to a specific segment of the business. Now, like I said, this isn't going to be possible in all cases, but if you can take a step back and reassess your company and think about which aspects of your business are actually tied to crypto versus which ones reflect a normal operating company, you may be able to reduce the overall risk rating in the eyes of the bank and increase your odds of being accepted. And maybe that will include being accepted in one of the 2 countries that I'm about to share. But before I do, since you've made it this far in the video, please give us a like so we know we should keep making more crypto banking content for you. Okay. 2 countries you might want to consider from a banking perspective if you have a business involved in crypto. Plus, I'm also going to give you a bonus that will help you think through your entire structure and the banking options for your crypto business after I cover these countries. So make sure you stick around for that. Now, obviously, the country you choose, it is going to depend on a number of variables, and I already shared these variables with you earlier in the video. They include where your business operates from, where your company is structured, where your customers, clients, and users are based, as well as where your suppliers, contractors, or employees are based, where you have tax residency, and of course, where you can realistically access the financial services that you want. And lastly, where you can find banks that are willing to serve your company. But one of these variables is more important than the others when it comes time to determining where to open an account, and it is where your company is structured. And that's because one of the first and most important filters that any bank will look at when you apply to open a business bank account is where your company is actually incorporated. So I'll be commenting on this specifically as we discuss each of these countries. And the first country that we're going to discuss is the United States. Now, I have talked about US banking in terms of cashing out crypto before, but business banking is a different game entirely. Compared to personal banking, you will have fewer options in the US. In fact, you even have fewer options than you did just a few years ago. And that's because the collapse of pro-crypto banks dealt a pretty heavy blow to the crypto banking landscape in the US. But that doesn't mean opening accounts in the US is impossible. Instead, you just need to know which banks to approach, how to apply, and how to reduce your overall risk profile so that you will be accepted when you apply to the bank. Now, as I said, I was going to share how company registration and place of operation fit into banking in each country. And when it comes to the US, it's a pretty straightforward formula to follow. If you have a company involved in crypto and you want a bank in the United States, your company should be registered in the US. Now, there are some exceptions, and we have seen companies registered in BVI, Cayman, the Bahamas, and even other mainstream offshore hubs successfully open accounts with ties to crypto. Though these non-US structures, they tend to be holding companies and part of a broader structure with more substantial ties to the United States. Now, in terms of the companies that can open accounts, this does include foreign non-resident owned US LLCs, which is among the most popular offshore structures being used by foreign entrepreneurs today. So if you are using this structure and you're in the crypto space, it is possible to open accounts. Now, the second country that we're going to be covering is Liechtenstein. If you've been in the crypto space for more than 10 minutes, you've probably heard that Liechtenstein is a crypto-friendly jurisdiction. But crypto-friendly, it doesn't mean easy to access, at least for banking. In fact, we've heard of individuals and companies that have spent months going through the onboarding process at popular Liechtenstein banks only to get rejected. Now, there are obviously different reasons for this, but a big reason is that these business owners, they were not prepared when it came to apply for an account, which you will obviously be able to overcome if you follow the steps and the changes that I've shared in this video. But what about the countries where your company is structured? How does that come into play when we're talking about an international banking hub like Liechtenstein? Well, as a general rule, you shouldn't be trying to bank in a place like Liechtenstein or Switzerland or Austria or Luxembourg or basically any other reputable international jurisdiction unless your company is structured in a reputable international jurisdiction. But even then, it's important to remember that your company is already considered high risk because of its involvement in the crypto space. And if you structure your company in an offshore financial center, you're just adding another layer of risk to your profile, unless you already have a credible team and a super profitable business from a banking perspective. Listen, the point is, wherever possible, look at registering your company in a midshore or onshore jurisdiction with a low profile, or at least a low risk profile. This will make your company more acceptable to banks and easier to onboard from a compliance perspective. And really, this is a good approach for any structuring that you're considering. Yes, focus on achieving whatever it is that you want to optimize for, but don't go so exotic with your country of incorporation that you end up turning off bankers completely. Okay, now for your bonus. And if you skip to the end of the video, don't worry, this one part of the video alone is going to save you hundreds of hours and thousands of dollars because it's going to help you avoid all the useless back and forth with banks and bankers just to find out if your business does even qualify in the first place. Now, what I'm talking about is a step-by-step process to figure out if your crypto business can qualify to open bank accounts or not. Again, this is going to save you hundreds of hours, but it's going to cost you nothing because it's 100% free. So here's how you do it. If you have a crypto business, regardless of the specific activities that you're involved in or where it's registered or where it operates or even where you want to bank, our team will do a free assessment of your banking options for you. All you have to do is spend 2.5 minutes filling out a form, tell us about your business, and tell us about the kind of bank accounts that you need. Then our team will review your application and get back to you within 24 hours, outline your options and your challenges and how you can move forward or not. If that sounds good to you, just click the link in the description below and spend 2.5 minutes to save yourself hundreds of hours. You can also go to globalbanks.com/apply and fill out your free assessment there. And when you're done filling out your application, come back here and then watch this video, where I share the 3 main crypto client profiles, how to make compliance teams your friend, and the 3 countries that are best for cashing out millions in crypto. So fill out your free assessment below, and then I'll see you right over there to watch that next crypto video.